Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, June 27, 2022. And what I'll cover in this video is a brief update on the equity markets. I've gotten a few posts out there, so I think you guys know my thoughts and the key levels to watch. Also want to do an update on gold, silver, precious metal stocks in general, or the precious metals in general. I already put out a trade on GDX last week, and want to share some things on the euro, gold, silver that'll help hopefully give a tailwind to that trade. Natural gas, I wanted to do an update as well. And I think that's about it. I'm going through commodities today. I've started to go through some charts. I'm trying to look for some additional opportunities there, particularly in the ag commodities. But at this point in time, I think there's better fish to fry. So let's start out here with the equity markets. QQQ, this is a 60-minute chart. The one that I shared this morning. You have the downtrend line that we hit in pre-market today. Remember, that's not going to show right now. These are only showing the regular session trades. So we hit that in pre-market, also coincided with the top of the gap, a gap backfill there. And we're flirting now with the bottom of that gap. We're in the gap. And I do think we're going to see some more upside. I gave you pullback targets. I'll get to those in a second. In NQ, and we hit the top of my pullback target zone. So that was the, of course, minimum pullback target. It was hit, and I shared my thoughts. I think we'll probably power on up. And part of that is, and let me explain that. So if I look at the QQQ chart here, I'm going to just put a level there. This would be right now, I'll call it my max pullback target, but really the maximum target that I would add to any long positions, and still be bullish if we pulled back there. Again, it's not a hard line, but it's a pretty significant level right there, and that's about 285, that line right there. You also have an uptrend line right there that comes in as well. So that's still the bottom of a potential pullback target if we can't get some traction here. And remember, we have the downtrend line just above, but if we break that, that's going to be bullish. Now, part of what goes into my analysis, and why I suspect that the pullback, as shallow as it was today, is over, is a powerful divergences and very constructive daily chart here, the more significant daily chart. We had a divergent low. Price action's been nothing but bullish lately, ramping up intensity recently. A lot of buyers here took out this gap here and effectively backfilled this gap today, and that was again the pre-market session. That's where we stopped. And I still think this is a good near-term target. When I say near-term, again, I have longer-term targets up here I think we're going to. So you need to define your trading style. If you're an active trader, you can game these little zigs and zags, pullbacks. That, if it's a 1% pullback on NQ is going to put thousands of dollars in your pocket. And even if you're trading the MNQ, the mini, or QQQ, I mean, you don't have to. NQ, the futures are just a leveraged version of QQQ, but they trade around the clock and they're very liquid. Not to mention tax benefits as well when you're trading those. But anywho, these are still longer term targets, and that downtrend line I showed you on the 60-minute chart, let me replicate it here on the daily. It looks something like that right there. So there it is. Let me add that to my daily chart now. I think that's an important level to watch. All right, I don't want to spend much more time on that because, again, I got a lot of charts out too, but let me show you the futures here. NQ. This is just a 10-minute chart here. This is the chart I gave you today, the hourly chart. And the pullback target zone was right here. I have to add that with my screen drawing tools. That's that big level right there. Again, that's the level I just showed you on QQQ, which is also the bottom of the max pullback target zone. So, if we can't, if this breakdown of this wedge right here, this is what I'm showing you. This is what we had. We had that divergent high pointed out this morning at resistance right there. If you recall last week, I told you this would be where I'd expect the first reactions to come into play after that big breakout last week. That was a great day on Friday to stay long, push it hard. Somebody had made mention on Friday, thought thought would go down next week, and my reply, I saw that post today. I said no, there was more meat on the bone, because there was really no resistance until once we took out, that was the last resistance level. You can see it was almost a straight down move and a straight up move. Now these weren't technically gaps. Remember, the NQ trades virtually around the clock, shuts down for an hour each day, and then on Friday evening, but picks back up on Sunday. That's why you see, pretty much round the clock trades and very few gaps on NQ. But where I'm going with that is when you see an impulsive move up, a rip like this, that green straight up explosive move, and then the same thing, a mirror image of it right there, but to the downside at the same exact price levels, that is very comparable to a gap. And then what I mean by that is you have very few trades. A gap, you have no trades, right? When you have a gap. But on a quick move up like that, those levels are filled quickly, and it just sort of acts like a gap. So that's why the top of that level was, going into last week and today, resistance where I thought we'd get a reaction. That was it. And it was good for, again, if you're an active trader, I'm just going to measure it out here for you, the pullback, which we pretty much nailed the high to low on because it hit the bottom of the pullback target zone, was good for, I'm trying to size up this measuring tool without moving any of the other lines there. It was a little high there at 2.25, so it was a little bit, about 2%. And again, an active trader, to sidestep that, get out of your longs, you avert giving back 2% in profits, and then you turn that into a gain. So really, you look at it that way, it's like an extra 4% juice on your account, or profits. And now where do we go from here? Again, you have the levels. If we fail to take out this high, again, that's now resistance, today's highs. I'm leaning that way from what I said based on the daily charts and everything else, the recent price action, go up here and hit this. But I'm completely open to the fact we could just have another leg down. And then the buying opportunities where you might pick up a long or add to any long exposure would be that uptrend line there, the minor one. And then again, the one I highlighted here, very, very big level to me, 11,707, which I will not add to any longs below that, and might even start to reverse into short positions if that happens. So leaning this way, a little more upside, and not married to it. But when you look at trading the small caps again, that looks pretty good too. This is a 60-minute chart of RTY, the small cap futures. You have a trend line here that starts back in early April. Nice clean downtrend line right there, which I'm targeting. And that comes in right now with perfectly, or should about the time we get there, if my analysis is correct, with that 1834 resistance level. With support right here, then it was resistance. Support once broken becomes resistance. Then you broke up above it there, and that was bullish. So we took it out and had a nice rally. We back tested it successfully. But then once we broke it here, you can see we didn't just meander around. We had pretty much a waterfall sell-off, and that moved down to the lows. So that, to me, is a pretty significant level. Almost like a magnet, if you will, or a black hole. Anything light included gets close enough to black hole, it's going to get sucked in. And that's once you see these big targets, they're usually hit. So to me, it's just a matter of, how do we get there? I can't. I'm not going to sound overly confident and say if we get there or that we're definitely going there. In other words, I mean to say that's not an absolute, but a very likely scenario. Okay. And also you can see right here I had a resistance level. Most importantly, this last previous reaction high right there, and that's been taken out, and it was back tested today on the pullback. So right now, yeah, we're overbought just like we were on QQQ and NQ, but we don't have, we have small, very, very small divergence right now. But my guess is that we'll meander our way on up there and maybe even have a bigger divergent high. And if we do, I'll look, as of now, I plan to most likely, as an active trader, sell my longs if I'm still long when we get to that level on NQ I just showed you, as well as this one on RTY, especially if they come in together around the same time, and then quite likely reverse short for a pullback trade. But that all depends on how things look if and when we get there. So I'll continue to update my thoughts as the charts develop. And let me take a peek at ES for S&P 500 traders. Let's go back to the 60-minute time frame here. and show you what we're looking at there. So here's another one that I'm targeting this downtrend line right here. I'd have to zoom out to a longer term chart. It comes back to probably yeah, that same early April high right there that I showed you on RTY a second ago. And so that's right up here along with this comparable. This is comparable to that price resistance on NQ. And so I'll watch, you know, when we come up, the trend line is going to be the first resistance. It's going to come in first right now because it's below that level, and then that level right above. So one scenario, and again, this is why I trade multiple indices. Maybe we're coming up here, and if NQ hasn't hit the trend line or its price resistance, maybe ES will overshoot the trend line and then get a rejection off that level. Again, we'll watch it. I'll watch each of these charts on their own. There's a similar level right here, that little consolidation that we had there, the bear flagging action. That's what we stopped at on NQ today. Again, comparable level, but ES has been lagging, and I made that very clear. You know, a couple weeks ago when I went back to a bullish and long positioning, that I favored NQ because I figured everyone's written growth stocks off. Even the Wall Street Journal is talking about how value stocks have and will likely to continue to outperform. When I see that, that's rubbish. That's what's right now. People are buying the beat down names that they've always wanted, the big growth companies, Apple, Microsoft, Amazon, all the fangs, and you can clearly see it in the outperformance in NQ and NASDAQ 100. But with that being said, a lot of people trade the S&P 500, and here's a big old, this was a gap, not a big gap, but it was a gap in the futures, and that's 38.97 right there. So we broke above it and we back tested it from above, and so that's, so far you have ES pulling back to support. And although there is a little bit of divergence there, and that could send us down a little bit more, and if we do, you're going to have comparable trend lines to those I showed you on NQ and comparable support. So the big level, just to wrap this up here, 38.15 and this uptrend line which intersect, there's the 38.15 level on ES, max pullback target. Anything much more than that doesn't guarantee we're going to take that other big leg down, but it certainly increases the odds, and that's where I will no longer be adding to any long positions, and I'll be more concerned about if and where and when to stop out of any longs that I might have at that time. Okay, let's talk gold and precious metals. We'll start out with the euro first. This is E7 euro futures. This is a 60-minute chart, and what you have here is you're coming off a divergent low right here, positive divergence, which is bullish. And so far, that divergence has played out for an uptrend. We've been zigzagging our way higher, but more so in I pointed this pattern out recently on the indexes. I'm going to bring this line all the way across because it's really good price resistance, and that's about 10671 is where I have it on my chart here, with almost a comparable resistance level above at 10703. So that was a lot of reactions on both those levels, called a resistance zone right there, right? We're right at the bottom of it, and it forms this symmetrical triangle pattern right here. And with this uptrend, I'm sorry, I meant to say this ascending triangle pattern. This is an ascending triangle pattern right there with a flat top and an upward sloping bottom there. And if it breaks above, again, this is what I call the BOD resistance. That 1703 means benefit of the doubt because they're both really good levels. And I think if it can pop that, it'll run right up here to the next resistance zone, which is 108.21 to 108.48. If that happens, that should be quite bullish for gold and silver and the precious metals. Let me show you euro US dollar before I move on. EUR/USD. Just to recap for those catching up, I pointed out in recent weeks we're down to this major long-term support zone. This is the euro going all the way back into 2008 right here, and that's a level that it's always stopped, the euro US dollar pair. So when we get down there, we've always rallied, whether they've been, certainly swing tradable rallies. Remember, this is a weekly chart. This is 1 year right here of price action, and you can see, so that rallied for almost a year off that level, hit it again here in early 2017, rallied all the way up until about the end of the first quarter, or maybe no, the end of the second quarter, roughly 2018 there. And then you hit it there, same thing. You rallied for over a year right there, and we're there now. So that could take us potentially up to this major primary downtrend line right there. And if that were to happen, that would be a net bullish event for gold, silver, and the miners as well. And quick look at the daily chart. You have positive divergence there. Nice, clean positive divergence. And then the 60-minute chart right here. You should, let's see, there it is. There's your uptrend line. Same symmetrical, or I'm sorry, ascending triangle pattern that I just showed you on the futures on E7. So pop that. And there would be your target up here at the top of this trading range that we have right there. And gold, looks like it can't get out of its own way lately. It's just grinding around, chopping around. But we did recently put in a divergent low on the 60-minute chart. And this sell-off today is unusual, especially considering the rally in the euro. So I think right now at these recent lows, again, it's not a hard buy. I would not consider gold a hard buy yet, but it's because the price action is lagging. But the outlook for the euro is bullish, and especially if we can get the breakout, we can still need that. And then gold needs to break out above this little minor downtrend line right here. See this one? Again, on the 60-minute chart. If you look out a little bit longer term, we'll go out 6 months, 2-hour candles. You can see this is what needs to go right here, this primary downtrend line off the highs. Right there. So you kind of have this, that is a symmetrical triangle pattern there, or close to it, almost symmetrical. And boom, you can pop that. That should be quite bullish for gold. So still on my radar. Let's go back down to 3-month and then just look at silver as well. Silver futures are SI. If I can cue that up here. There we go. And still, coming off this divergent low right here, 60-minute chart. I'll try to grab my line tool here and show you. There's our positive divergence right there. Little minor trend line, not very significant, but there's a pretty good resistance level, about 21. We need to really get above all this mess right here, this choppy, sloppy, sideways grind. And again, I'm still liking it for now. Not a hard buy at all, maybe just something to be scaling into. Palladium broke out. I recently highlighted that with this downtrend line on the 60-minute chart. PA, Palladium Futures, or PALL is your ETF if you'd rather trade an ETF for it. Took out the trend line right there today, breakout, and it's coming in for what looks like maybe a back test. So if we get a back test and a test of this uptrend line here, that would be an objective long, and we could see a rally up to, I'd say I'm still targeting that 288 level. I believe I told you that's what I was looking at before, with the next target here 1955-ish right there. Okay, natural gas, somebody inquired about that, and I replied to that comment today. Yes, this was the final target, this uptrend line right here off the lows. That was hit last week on Friday, and we also had, it was also coincided with the $21 support right there. So dual support levels, and we milked pretty much all of that short on the way down. And now I think it's time to be long natural gas here. I'll show you another chart. That's the daily chart of UNG. Here's what it looks like on the 60-minute chart of UNG. Remember, UNG is probably the most liquid non-leveraged natural gas ETN. Nice, clean, perfect pullback to this uptrend line. Lots of reactions there. This one here, and as I like to see, positive divergence. So a minimum, a kickback to that 2270 level, which would be trying to grab about where we were at the lows today on the trend line. That'd be about an 8.5% bounce. Quite possibly more. You could even draw a downtrend line like that. Steep wedge, and if that wedge pops, you could get a little more going there. So maybe either take the quick buck, an 8% pop, or just trail a stop up and let it ride. See if we can run a little bit more than that. Let me go back to my NG chart. Futures, this is what it looks like on the 60-minute chart of natural gas futures. Nice bullish falling wedge, just like I showed you on UNG right there. There's your positive divergence. minimum target right here, 6.578 right there, and then I think it can work its way up to here again, at least that 6,897 right there. And if you take the widest part of the wedge, that would be your measured target. That'd probably take you up closer to that 7,380 level right there. So anyways, if no reason to still be short. Again, we hit the maximum target. Natural gas got chopped in a third. And who knows? It's a trendy little sucker. Maybe it can continue lower, but if you didn't cover any short or your shorts already, at the very least, lower stops if you think it's going lower to protect your profits and let it run. Otherwise, I think it's good for a bounce here. Let's do Bitcoin. Bitcoin just seems like it's gonna pop any day now, but it needs to take out that 21,800 level right there. If it does, it's I think it's going to be it has the potential for an explosive rally. I'm talking about almost a 40%, 38% gain. No, right about 40 from where we're at right now. But it really needs to take out 2108. You look at Ethereum. Ethereum has resistance at 1260. This is the actual crypto right there, ETH. If it can pop that 1295 level, same thing, just like Bitcoin, it has to me a very clear and obvious target, one of those magnet targets. You got a big gap right there as well that's going to come into play. But so if these guys can pop, you're looking at a nice trade to try to quantify it for you. Oh, don't want to get too close because then I grab the trend line, it moves it. So you're talking about a 40, if hit, about a 45% run in Ethereum again if hit. This will likely, for that to play out, we'll likely need to see the stock market to continue to rise, because then that's going to put people back in that risk-on mentality. They've been in risk-off mentality or risk-off mode for a while now. So I remain bullish on it, building position, but it's not an all-in moment to Ethereum and Bitcoin breakout. You have my levels. I'll give you GBTC here in a second, and then one more. Somebody asked about one of the what I used to call my crypto proxies. But here's GBTC. That's Grayscale Bitcoin Trust. It's the closest thing to an ETF on Bitcoin. And you can see on the 60-minute chart, we put in that divergent low. I believe I covered this recently. So we need to pop this level right here. That is not the tool I wanted. Let's get rid of that guy. Delete that line. I tried to grab a horizontal line. So it needs to just pop, just like Bitcoin and Ethereum, this recent level of consolidation here. You also have this sort of ascending triangle pattern going up. So if we can pop that about $14, it should run. Targets would be at first target the bottom of this big old massive gap right there, and then you have the top of the gap there. But I would be covering a little shy of that. There's going to be, if that happens, you're going to see a lot of giddiness. And there'll be a lot of people, if you caught it right, wanting to take profits, as well as trap longs that have been in this thing all the way down and are, crying a river right now. Those Bitcoin diehard fans, they're going to want to sell, get out on the first half decent bounce. They just haven't been given that. That's the nature of a bear market. It just doesn't let out longs that get trapped in. And then they get the bear market rallies. They're pretty powerful, but then eventually they get sold into. So that's all I'm looking for. But again, everything's in perspective. Put everything in perspective. A bear market rally in something as volatile as crypto, 36%, 35% from where we're at is just par for the course. This thing's already dropped since it peaked along with the Nasdaq back in November. It's already fallen about 80%. So, and then the other trade idea is RIOT. RIOT's one I used to trade actively on the site, give you trade ideas all the time, and pretty much align that with Bitcoin and the other cryptos. It's not a cryptocurrency, it's RIOT blockchain, but tends to run with them. And you can see you have a downtrend line here. It's trying to crack, but it's not impulsive yet. It probably won't run until and unless crypto runs, Bitcoin and Ethereum. But you have, look at this, nice positive divergences forming here on the daily chart. My targets are 619, which look, we broke out and we're back testing the trend line now. You can make a case to buy it there, although the breakout was not super, it wasn't impulsive, but it was on decent volume. Volume's been picking up on this thing. So I'm going to quantify it for you. That first target there, you'd obviously want to sell a hair below, but at 619, that's about a 26% run. Next stop, 833 is where I'm figuring, and that's not a hard level, but roughly you also have a reaction high there about 768, and that'd be about a 55 to 66% rally if we get there. Max target, I'm just going to color it up so I remember to address this later when I follow up on this one. Max target would be there about 1375, and it's certainly possible. Just crypto and everything else in this market. Those things are trendy. When the trend reverses, everyone piles in, and it's the nature of crypto related companies to move that much. So there it is. Oh, and I didn't mention, I did in the comment that I followed up to. This was resistance back here, and there was a major breakout above that level. See, we had that area of consolidation broke out, and you take that line across, and that's exactly what we fell to. So case can be made to start accumulating RIOT here down to, but not below that 428-ish level. And then, of course, if we can start to walk away from the trend line, you can add to that one. And again, that's a max bounce target there. And just to follow up, kind of loop back, I threw this one out as a trade idea last week with a chart. GDX, it's just at that really, really, really strong about 2890-ish support level. No guarantee it'll hold, but again, you have positive divergence just like you did here, and so if the bullish case for gold that I just laid out and the euro, if those play out, then you have a nice profit potential as well on GDX. And this will also, for even the second and especially that third target to get hit, you'll most likely need to see the stock market mount that multi-month rally that I'm talking about having the potential. If the equity market takes another leg down to hit my final near-term bear, or what I call my initial bear market targets. I know that I'm going to say it right. My initial final bear market targets. Or final initial bear market targets. Sorry guys, I'm trying to figure out how that works. I think you know what I'm referring to on QQQ and SPY and everything else. This is the pre-COVID lows right there. It's about 235 on QQQ and the blue primary uptrend line. And I think that'll just mount a very strong rally that can last months, but ultimately I think this long-term primary trend line goes. This is my bull market uptrend line. The media, everything I've seen written declares this is one of the biggest bull markets in history up to 2020 before COVID, when COVID hit, and then that a bear market. But to me, and I've covered this many times, that just took us back to long-term bull market uptrend line. And it was more of a correction, if you will. Just corrections to me don't meet that antiquated 20% definition anymore. Not in the magnitude of the bull and bear markets that we've had in recent decades. All right, I'm going to wrap it up here. You guys know my thoughts. I'm just scanning my other charts to make sure I didn't miss anything that I wanted to cover for you. No, that's about it. So liking natural gas as a actionable buy now. Bitcoin is kind of a soft buy. Gold, silver, soft buys. Palladium as well. And obviously, still long the equity markets, and that's where I'm at right now. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a great day.